Look on Nigeria's debt markets. I'm joined by Egie Akpata, head of debt capital markets at UBA Capital. Egie, it's great to have you on our show. I really want us to talk about this debt auction that is holding next week. But before that, I think a very important point to make is how much debt the federal government has raised so far. We do know that they had budgeted 577 billion naira in its budget for 2013, but it seems in the first quarter alone, we've almost done 50% of that. So how do you see things changing going forward? Because they've also announced they're going to issue another 100 billion naira in debt this month.
Yeah, good afternoon, Wole. Yes, it's a bit interesting. Looking at the auction for next week, there's 104.8 billion on offer. And if you just look at that run rate, it gets you to 1.2 billion for the year if they continue at that rate.
Right.
Last quarter, 2 out of 3 months were over 100 billion.
Right.
And that's just what was advertised. I mean, if you look at the auction results for February, there was, I think, 10.8 billion unsolicited bids that were issued, and then in March, 85 billion. So really, in reality, 380 billion has been issued in Q1. Clearly, at that rate, you end up even surpassing 2010's number of 1.2 trillion.
So what does this mean?
It seems as if the government is taking advantage of low rates,
right? Which
is what happened in 2010. When you have rates that are low in quotes, you go out to quickly borrow as quickly as you can before rates shoot back up.
Right.
Considering the fact that 6 months ago they were paying 16.5, now paying under 11%.
Right. Very good point there. But at this rate, it seems to me that they may have to just review that deficit target, because I'm just trying to imagine what they would do if they don't continue to issue at least 30 billion a month. It seems the market is already used to that issuance calendar.
Well, I guess maybe for now the market can absorb that 100 billion plus a month. But obviously, if it continues at this rate, we'll go back into the same old debate. So whether the federal government is crowding out the private sector by issuing so much paper, making it so attractive for buyers to invest in government paper that there's little need for the investors to look at corporate or state government issues. Right,
right. A very important point there. We'll see how things play out. But focusing on the auction next week itself, again, they're issuing the 20-year. The yields, we've seen how yields have played out over the last 1 month, a bit volatile, but there are views that we will continue to see the bond market rally. Are you convinced that we're going to see a rally going into the end of this quarter?
Well, this end of this quarter in June, I mean, it's a bit far away. A lot depends on what happens for foreign investors and the exchange rate. But the government is also obviously taking advantage of appetite for the 20-year or 2030 bond by getting money at 11% for 17 years. It's a great deal as far as the government is concerned, and if the investors are willing to put up the money, I'm sure the government is happy to take it.
Okay, and then let's move on to some other stories around corporate issuers. Diamond Bank, Fidelity Bank, all planning to issue foreign debt. And I want to get your thoughts on that development. It seems the local market is not the place to go if you're issuing debt here.
Well, there might be other reasons why they're going foreign. I mean, the local market in the past has proven that it can provide significant amount of debt. On the banking side, UBA did in 2011 35 billion subordinated note, which is substantial, over $200 million. So in terms of people going offshore, it might be partly strategic in terms of getting fixed rate dollar funding to put into transactions that they know are of the fixed rate nature, because the reality is they could probably get money at about close to the same rate by going with bilateral lending. But it's also taking advantage of the move in yields of sovereign bond that was issued, and also GT and Access Bank. When you have these yields now under 5%, it's the people are probably thinking, I can go to the market, get a fixed rate around 5%, I can on-lend that's closer to 9%, and it's a good trade for them. But the local market can raise these kinds of money. We've seen Lagos State raise 80 billion, which is the largest so far. And so you can raise $350 million in Nigeria, equivalent in Naira. Okay,
but are you hearing about any corporate issues, given where yields are now? It seems a lot more attractive than, say, 6 months ago. So I want to anticipate that at some point we should see some corporates issue bonds in Nigeria.
Yes, you will see some issues coming to the market. There are a couple in the pipeline. Again, things are kind of driven by the accounting cycle. For companies that have a December year end, many of them, the audits are just coming out, so they're trying to move the transaction into the market. Again, companies have 9 months as far as the SEC is concerned. Accounts are valid for 9 months, so you will see a bunching of transactions in Q3.
All right, and what about on the sovereign subnational space? The states, are we anticipating any issues in the next few weeks, or sorry, next few months?
Again, with the states have a similar problem. Many of them will run with the December year-end numbers, which won't be out till about later this quarter. So by the time they get all their paperwork in place and have gone through the process, you'll be in Q3, maybe even towards Q4. But there are some transactions that have held over from last year that have been ongoing. Those will start to hit the market from later this quarter in Q3.
All right, and if we can touch very close, briefly, the equity markets and the potential for issues there. In your view, a lot of people talking about IPOs perhaps at some point this year. Your thoughts on what we're likely to see? Given the way the market has performed, I mean, we've seen the market gain well over 60% if you trace this back to January 2012.
Yes, in terms of the corporate issues, many people are starting with rights issues. So we have a number of rights issues in the market because many shareholders are still reluctant to dilute their ownership at this lower prices. I mean, this market is coming from a high of 66,000 on the ASI, and if you look at the trailing P ratios at the peak of the market, high, more like 25, 27 P trailing PE ratios then. So some people are still used to high prices for their stocks, which they are not getting anymore, even though the market has rallied in the past 17 months or so. But as time goes on, as people get more used to the current prices, you will have some primary issues. But for now, most of the money being raised is going to be by way of rights.
Right, right. So perhaps an IPO by the end of the year, you think?
So definitely. If the trend continues to go up, and particularly if you have a scarcity of new quality companies coming to the market, the first few that come will definitely be very well received.